In this video, we're going to talk about range bars and eliminating the market noise. Now, range bars are a different type of chart to your average chart, to the normal chart that you'll find on MetaTrader or most other brokerage platforms. Whereas on other charts, you get time-based charts, which are based on a predefined amount of time. So for example, your 15-minute chart or your 1-hour chart, each candle on that particular chart or each bar on that chart is 15 minutes long. So it contains the price action for that predefined amount of time. A range chart focuses only on the price. So it doesn't matter how long it takes for a particular candle to finish. What it's focused on is only finishing the candle when a certain range has been exceeded. And we'll talk more about that as we go into the video. But what I need you to know about the range charts themselves is that they are a great way to eliminate the market noise. And in fact, it's one of our primary techniques for entering the markets now, is using the range charts and using this system that we're about to teach you based on the range charts. So just very quickly to avoid confusion, I just want to talk about the terminology very quickly. I use the word bar and candle interchangeably. All of my charts are candle charts, but I often refer to them as being range bars or range charts, okay? But ultimately, what we're talking about here are candlestick charts. The difference is that on a regular chart is the candles are based on a certain period of time, whereas with range charts, the candles are based on a certain price range. So that's really the only difference there. But as I said, I use the words interchangeably. So I may say range chart, I may say bar chart, candlestick, whatever, but ultimately they mean the same thing. So let's look at range charts against time-based charts. We'll start with conventional FX charts, which are generally time-based. Now, a time-based chart contains a price action for a predefined amount of time, as you guys already know. So a 15-minute chart contains the price action for a 15-minute period of time. An hour chart will contain the price action for an hour period of time, and a 4-hour chart for a 4-hour period of time, and so on and so forth. So every candle on your charts will be for that predefined amount of time, and it's something that you can select. Now, the problem for me with time-based charts is during quiet periods, so things like the Asian period, bars print for no reason whatsoever. Okay, the beginning and the end of the bar is based on an arbitrary moment in time. So in the Asian sessions when nothing is happening, you may get many bars printing just because, let's say for example, you're trading a 5-minute chart. Okay, now over an hour you can get what, 12 5-minute bars in an hour. Now think about that for a second. During the Asian session when nothing much is happening, you're going to get a number of price bars or price candles printing and nothing's happening on the chart. Now, what does that actually do for your chart? It starts to make it look choppy and it starts to make it look messy. And further to that, any indicators that you're going to use will start to get a little bit skewed during the Asian session because there's nothing much happening. Okay, they're quite rightly reading a decrease in volatility, but with the Forex market being a 24-hour market, it's reading the decreased volatility during a time that you would expect it. And for that reason, I just find that they tend to give some false signals here and there. And that's just my personal perspective, okay? But time-based charts, you know, nothing significant needs to happen for a new bar to print. So they're just based on an arbitrary moment in time, and that's it. Now, I'm not saying they're useless. They definitely have a place in the markets, and we still use them for our own analysis and for some trades that we take. But if we want to trade pure price action, we found a better alternative to that, and that is the range chart or the range bars. Now, range bars are charts that are based on price. So each bar on a particular range chart is exactly X pips from high to low. And now that could be, for our day trading, we use 8 pips. So every candle on our chart, if you measure it from the high to the low, it's 8 pips wide, okay? If we were doing more longer term trading, then maybe we have something like the 45 range chart up. And if we have the 45 range chart, then each bar or each candle is exactly 45 pips from high to low. And that's what I'm saying, that, you know, with time-based charts, nothing significant needs to happen for the next bar to be printed. Whereas with range charts, actually something significant does have to happen. The range that you've predefined, that needs to be exceeded for the next bar to print. if that range isn't exceeded, then all of the price action will still be contained within that one price bar that we have there. So what that means is if the market is consolidating, you're not going to see that many bars printed. And if you don't see that many bars printed, you have a cleaner chart, which eliminates the noise from your charts. And it helps you to identify the trending markets a lot better. Because ultimately, the bars are only going to start to print when you have momentum in the market. And when you have momentum in the market, then more often than not, that market is trending. So the range charts, they eliminate the market noise by ensuring that all of the consolidation, all of the sideways price action is contained in just a few bars, as opposed to arbitrarily being created as they are on a time-based chart for no reason other than a predefined amount of time has been exceeded. The other benefit about the range charts is it allows for an earlier entry and a pure price action based entry. Okay, and I'll show you more of that when we get into the system in the next few modules and the next videos. But at the moment, it's just important to understand the difference between a time-based chart and a range chart. So let's quickly have a look at the candles. Well, as you can see on the left, we have a time-based candle. Now with time-based candles, usually you have a wick on either side, you have an open and you have a close. That's normal for a time-based candle. And the reason that the close doesn't coincide with the high or the low of the candle is ultimately because it doesn't have to, because the end of a candle is a period of time. It isn't the price exceeding a particular point. Whereas with a range chart, your close is always going to coincide with the high or the low of the candle. And the reason for that is that the high or the low of the candle has to be exceeded for the next range bar to print. If it isn't, then all of the price action is going to be contained within that particular candle and a new one isn't created. Do you guys follow that? So with a time-based candle, you can have wicks either side, whereas with a range candle, because it's a predefined amount of pips from high to low, that particular range has to be exceeded for the next bar to print. If it's not exceeded, then you're not going to get a new range chart created for you. So now that we've seen that, let's take a look at one or two of the charts just so you can see the differences between them and you can see what a range chart looks like and the sorts of benefits it can bring you. So in front of you have a 5-minute chart. Now I've picked a chart which is relatively okay, so it is an upwards trending market, albeit it's a little bit choppy in places, but you can see that the market is indeed moving upwards. Now we can see, or I can see, a few opportunities to enter this market here, but I would by no means say that this is a very or a particularly clean chart. I would say that there are opportunities to enter the market there, but I have seen better looking ones. Now let's take a look at that and compare and contrast that with the range chart for the same period in time. Now you see how with the time-based chart, you have candles, so you have wicks that are long on either side, and kind of the price action doesn't make that all that much sense at all. Look at the range chart here. Here, from my personal perspective, I can see a number of different entries there, and I think it's a much cleaner chart to trade than the one that I just showed you. And in fact, just to illustrate that, let's hop between the two charts so that you can do a bit of a comparison. So here's the time-based chart. And as you can see, you've got long wicks either side. It's kind of the price action doesn't really know where it's going. You've got one entry there that you can take if you're lucky, which is that one in the middle. This one over here I'm talking about, that's probably the only real entry that I can see that would make any sense from this chart. However, if we move along to the range chart, then you can see, first of all, the candles they're all the same size. So if you look at this here, every candle is the same size from high to low. It's the 8 range chart. So from high to low, each candle is 8 pips. But in addition to that, if you take a look at this here, you can see that the price action is a lot cleaner. So I can see an entry to get into the market over here. I can see an entry here. I can see one here. There's another one there, and there, and there too. So there's 4 or 5 different opportunities to enter the market there based on the range chart. Whereas if you were trading a time-based chart, it would be a lot more difficult to identify those opportunities and, more importantly, profit from them. So that gives you a little bit of an introduction to range charts. Now, don't worry if you don't understand too much about it. You will start to understand more as we proceed through the course and you start to look at some live trade examples. What it's important to understand about the range charts now is that they're not dependent on any predefined amount of time. So this bottom scale here, even though it has time periods on them, you can pretty much ignore them because the range charts are only going to print as and when a particular range from high to low is exceeded. Okay, so the range charts are based on price only. They are only based on price. They do not take time into the equation. They completely eliminate time from the equation. And if you eliminate time from the equation and focus just on the price, then you're able to focus on the price action and having cleaner, more tradable charts because you're excluding the ugly volatility that's there for absolutely no reason, but just to wind us up as traders. Okay, so I hope this makes sense to you. I hope the video is something that you feel like you can get on board with, and these types of charts are something that you feel that you can trade. But if you have any questions, please feel free to post them below the video or send us an email or post them in the forum. And I look forward to seeing you on the very next video. So take care now.